Hello, everyone, and welcome to This Explainer. Today, we're putting on our investment analyst hats and diving into a company that operates in a space that is, honestly, pretty unassuming. Some might even call it completely unsexy. We're talking about bugs, rodents, and the entirely unglamorous business of getting rid of them. The company is Rollins, Inc., and what they've built here is nothing short of a highly lucrative, incredibly resilient financial fortress. So what if I told you the best investment in your portfolio might just have 6 legs? It's a fascinating question, right? When we're hunting for explosive growth in stock market darlings, we usually picture tech giants or, revolutionary healthcare innovations. We definitely don't picture cockroaches, termites, and mosquitoes. But as you'll see today, when you contrast the visceral, unpleasant reality of household pests with the absolutely beautiful, highly predictable financial metrics they generate, you get one of the most compelling investment narratives out there. Take a look at this, the standard suburban house. This is Rollins' core residential battleground. And here's exactly why this business is so brilliant from an investment perspective. Pest control is driven by absolute biological necessity, not discretionary spending. Think about it. If you find termites eating your foundation or bed bugs in your home, you weren't sitting around waiting for interest rates to drop before you call an exterminator. No way. You take action immediately. That dynamic makes this seemingly ordinary suburban street a recession-resilient goldmine for a company equipped to handle it. Let's move into Section 1, a fortress business model. Breaking down their revenue, residential makes up the biggest chunk at 45%. That's followed closely by commercial at 35%, and then termite and ancillary services rounding the whole thing out at 20%. And it's important to note, Rollins isn't just one brand. They use a highly effective multi-brand strategy. You probably know their flagship brand, Orkin, but they also operate Home Team Pest Defense, Northwest Exterminating, and Fox Pest Control. This setup allows them to capture totally different segments and price points while centralizing all those back-office efficiencies. Okay, let's dive into this number because it is the absolute key to the Rollins empire, 80%. A massive 80% of Rollins' revenue is contractual. We're not talking about one-off emergency calls here. This is about ongoing protection plans. They have achieved the literal holy grail of finance, recurring cash flow, month after month, year after year. That revenue just keeps coming in, completely regardless of the broader macroeconomic climate. That recurring revenue foundation allows Rollins to maintain incredibly robust operating margins of roughly 19.5%. Even better, they traditionally convert nearly 100% of their net income straight into free cash flow. It's an absolute compounding machine. That cash is then deployed right back into dividends and strategic acquisitions, just feeding the engine over and over again. Moving on to Section 2, decades of consecutive growth. The corporate evolution here is practically a masterclass. Believe it or not, they didn't even start in pest control. Founded back in 1948, they were initially Rollins Broadcasting, just a regional media firm. The game completely changed in 1964 when they executed one of America's very first major leveraged buyouts, acquiring Orkin for $62 million. For a long time, they were this sprawling conglomerate, dabbling in oil services and television, but in 1997, recognizing the vastly superior economics of pests, they shed their non-core assets to focus entirely on this one highly profitable niche. Now, what's really interesting about this data is how that historical foundation holds up today. Look at Q1 2026. Total revenue is up 10.2% to over $906 million, with solid organic growth of 6.6%. Adjusted earnings per share, up 9.1%. You can really look at this quarter as a stress test in a pretty mixed economic environment. And the result? It proves that their staggering streak of over 24 consecutive years of revenue growth is still very much alive and well. Let's look at Section 3, Market Tailwinds and Innovations. Rollins is currently riding some massive structural tailwinds that are naturally expanding this $20 billion market. First off, climate change. Warmer weather is physically extending pest seasons and pushing termites and mosquitoes further north. Second is urbanization. Increased population density naturally creates the ideal conditions for rodent and cockroach infestations. And finally, the industry itself is highly fragmented. We're talking over 20,000 mom-and-pop shops in the U.S. alone. For Rollins, that creates just an endless pipeline for acquisitions and growth. Now, while swatting bugs might seem decidedly low-tech, Rollins is actually investing heavily to modernize its moat. They are rolling out AI algorithms for truck route optimization, basically reducing fuel costs and fitting way more stops into a technician's day. They're also shifting heavily into digital lead generation.
And they're developing proprietary, eco-friendly baits to appeal to ESG-conscious residential and commercial clients. So they're actively protecting their margins through internal innovation. Next up, Section 4, Headwinds, Risks, and Valuations. Because every investment has risks, we need to look closely at Q1 2026, which wasn't perfectly clean. Their free cash flow was actually down 20.6% year over year to $111.2 million. Now, that was primarily due to the timing of tax payments and interest on notes, but still, operationally, they faced margin pressures from higher insurance and claims costs, as well as deleveraging from people costs due to slightly lower volumes early in the quarter, mostly from bad weather. You also absolutely have to consider the valuation risk. The stock trades at a Rollins premium. That's a PE multiple often north of 45x, which leaves very little room for error. Plus, there's always ongoing legal risk regarding termite damage litigation. And here's another metric you as an investor need to keep an eye on: massive insider selling. Over the past 6 months, there have been 20 sales on the open market and 0 purchases. Most notably, Rollins Voting Trusts unloaded over $2.2 billion in shares. Now, while the market often tolerates that premium valuation because of the company's sheer quality, this level of insider offloading is definitely something that warrants monitoring. When assessing risks, you also have to look at the competition. The market right now is basically an arms race between Rollins and Rentokil, which recently became the largest player by volume after acquiring Terminix. So the crucial point here is this: Rollins currently maintains a massive edge in execution, while Rentokil has been suffering from logistical indigestion trying to integrate that massive Terminix network, resulting in low single-digit U.S. growth. Rollins has remained agile. They put up near 8% organic growth last year and are nimbly poaching market share while their rival is distracted. Let's move to Section 5, Long-Term Growth Algorithm.
Let's see how this all builds together, because Rollins has a very specific, algorithmic approach to sustainable double-digit earnings growth. Step 1 is achieving 7 to 8% organic growth through pricing power and expanding their commercial lines. Step 2 is adding another 2 to 3% growth through M&A, specifically bolt-on acquisitions like their recent purchase of Romex Pest Control. And Step 3 is generating a free cash flow conversion of over 100%. They take all that cash and compound it right back into the business.
But at the core of all these financial algorithms are the people actually doing the work. Rollins knows that in a localized service business, reducing technician turnover is the absolute most direct path to increasing a customer's lifetime value. Think about it. If a customer trusts the technician who comes at their house every quarter, they keep the contract. Retaining teammates retains revenue. And this is perfectly summarized by their CEO, Jerry Galhoff Jr. He stated, "Our company compounds cash flow by acquiring and growing market-leading pest control businesses. We do this with a people-first, customer-centric mindset that is the foundation on which our financial engine is built." It's a great reminder that even with all that AI, rat optimization, and digital marketing we talked about, their modernized approach still relies fundamentally on human execution. Which leaves us with this final thought. In an unpredictable, uncertain economic world where tech trends come and go and consumer spending wildly fluctuates, is there anything more predictably profitable than the business of protection? The Rollins moat proves that sometimes the most beautiful financial returns come from rolling up your sleeves and doing the dirty jobs nobody else wants to do. Thanks for joining me on this explainer, and keep looking for those hidden fortresses in your own analysis.